Hello everyone and welcome back to the channel. My name is Brent and in today's video we're going to go ahead and cover the M1 Finance portfolio. We're going to go ahead and kick it off by taking a look at the overall performance of the portfolio, what stocks are up, what stocks are down overall in the portfolio. We're going to go ahead and jump over into the weekly performance. What stocks are up on the weekly side? Did the portfolio go up or down in comparison to the four main indexes? We're going to go ahead and take a look at those as well. And then we're going to go and take a look at the activity for the past week. What stocks paid out dividends? How much should we receive? Did we do any buys and sells? I think it was pretty calm. I haven't really made any content between the last 2 weeks, so I don't think we made any buys last week. We're just kind of busy during the holiday, and I didn't make a video there. And then number 4, we're going to go ahead and cover what is the current dividend income of the portfolio over on M1 Finance. We started this all together back in 2018 January here on the channel, so we've been continuously growing it just during this time frame, maxing out the Roth IRA, continuing to dollar cost average into positions and kind of swap positions inside the portfolio. So it's been a nice little adventure. So if anybody else has joined along the way, we can do a quick, let me know down in the comment section below if you also started around that time frame, a Roth IRA. And then number 5, what stocks are we going to be buying this week? We're going to go ahead and cover just a few positions that we looked at and what positions we're going to be adding to our portfolio here in this video. So with that said, if you guys are brand new here to the channel, definitely go down below, hit the red button to subscribe, make it great, hit the bell to be notified every time we release a brand new video. And of course, give this video a thumbs up, make it blue, and let's go ahead and get into the video. So it looks like one and a half weeks ago, 2 weeks ago, this is showing 1 week ago, but it's more like 2 weeks ago, we kind of made out a video here, that we kind of peaked. The portfolio, the stock market had kind of peaked out. And I did believe that we're going to begin to kind of come down as we got closer to the Fed announcement. And it is coming up on Wednesday, September 22nd. The Fed's going to be coming out announcing whether they're going to begin tapering or not. I believe that they're going to begin their tapering program. They're going to go ahead and shoot for November starting, where they're going to begin slowly pulling back from buying up assets. And that's going to slowly kind of cause, I don't think the market obviously will not crash. We shouldn't have any losses, big losses, 15, 20, 30%. But we may see some of those losses that we saw back in 2019, anywhere from 1 to 5% in a given day, in a given week, in a given month. We could see some volatility starting in November up until mid 2022 as the tapering goes down. I think it's like 20% and 10, 20% every month. They just begin to pull back slowly over the next 6 to 8 months, and then they just kind of stop buying up assets and bonds and all that fun stuff. So we'll see how that all goes. Now, jumping over into the Roth IRA over on M1 Finance. Again, this is something that we started up back on January 8th, 2018. Here on the channel, I made a first video going over depositing capital into it, my mistakes with depositing capital into it while having the auto invest feature on. It basically auto invested my entire amount into the market at all-time highs in January 2018, and then the market had a bit of a correction of 10% in February. I think we can't see it here obviously, but we had deposited our money, and then it doesn't even show, it's just a little blip along the way. Here's 2020 right here. We can see that this was a pretty good slash right here. I think our portfolio right there fell from, a near high of 21,000 to in the $14,000 range. So that was a big old trough right there, but we continued to dollar cost average. I believe during this time frame, I also added, more into the Roth IRA. This was March of 2020, so we still hadn't maxed out our Roth IRA, just took a lump sum and dumped it in during the dip right here. And then we can see the quick recovery here through the markets along with our added equity. And it's been trending nice and slow ever since then. So here overall, our return sits at 65.69%. I think in this last video here, it was up at 70 some percent here. Yeah, 77.7. So that was the lucky 777, and we did lose a little bit since we've made that video. If we take a look at the 1 week here, we're down 1.15, but really quickly before I get into the 1 week, let's go ahead and take a look at our best performers and our worst performers. Our Top three performers are Apple, Lowe's, and Main Street Capital. Apple and Lowe's stay generally at number 1 and number 2. Number 3 can be alternating between Main Street Capital, Avery Dennison, and ABM Industries. These kind of fluctuate sometimes. You can see that they're only difference by about 8 or so percent, probably 8 to 16% there. So they kind of fluctuate every now and then. Our top 3 losers are Clorox down at last place, Hormel Foods, Merck, and Colgate. These are the only 4 positions that are negative in the portfolio, and these are all positions that we added into the portfolio this year. And I do believe that, they're only down a little bit. This one's down $200, 127, 153, $70. I think the percentages here are kind of wacky. I don't know if it's correct. I'm not going to say that it's incorrect or correct. I'd have to just look at a change percentage calculator and see if that's actually correct. But all 4 of these are staying in the portfolio. I do believe with time they'll slowly recover. I think the earnings on all of these have been completely fine, so I'm not in any, not worrying at all. Jumping over into the 1 week performance now, we can see that our portfolio took a bit of a beating. So we are down 1.15%. Now, if we compare that to the S&P 500, it is down 0.57%. The Dow Jones is flat, down 0.07%. The NASDAQ here is down 0.47%. And the Russell 2000 put on a gain here of 0.42%. So our portfolio well underperformed all the main indexes, losing a whopping 1.15%. But this all kind of started here back on September 2nd. Our portfolio as of September 2nd has been trending lower, on a daily basis here, just lower and lower and lower, just going into what it is here, September of 2021. Generally in September, it's one of the most negative months out of the entire year. So I don't think, it's not out of the norm here for this performance to happen. So I'm just going to go ahead and just continue to let it sit, buy up more shares, and invest for the long term. As we've been doing this entire time. We'll probably see a little bit of a blimp here, but as this chart gets longer and longer over time, you won't even notice that these little blips even occur. It'll just look like a line overall. Okay, so the 1 week here, our top 3 winners are Lowe's, Digital Realty Trust, WP Carey. So we have a household sort of goods, general goods sort of store for crafts and stuff. Digital Realty Trust and WP Carey are 2 real estate investment trusts. Avi, this one's kind of been beasting out here recently. I know it kind of fell down to about 110. It's at 107 right now. So that's actually cheaper than where I kind of sold off a good chunk of mine. I think I sold off some of mine in my other portfolio at 110, and it had rode up to about 117. So it has been pulling back here slightly. Kind of interesting to see. And then what else do we have here? Main Street Capital, and then it kind of dwindles down. So just the 1%ers here, WP Carey, Digital Realty Trust, and Lowe's are up over 1%. Now, the majority of our portfolio, you can see, is quite red, going down. Lots of 1% losses there, all the way down to Avery Dennison, down 4.32%. And Pfizer. Pfizer is one here, down 3.73. I actually sold Pfizer at, I believe, $59. Maybe 49. It may have been 49, 59. I'll have to look at my sells. But I did feel that Pfizer had been kind of pushing up against the ceiling for quite a while. I did sell out of them just a little bit, just kind of taking some profits. I'll probably buy back into them again, just because I would like to kind of bump up every single position in the portfolio up to 2000s. And my initial cost here is only 862. So I could definitely use this opportunity. We'll look at it on the charts here in just a second. But it is below where I sold off some of the profits, so I could take those same profits or just, some of my cash balance and apply it towards a lower cost of where I initially took profits of Pfizer at. So nothing negative there. Everything is looking pretty good. Now that is the 1 week performance. Let's take a look at the activity. So we did receive some dividends over the past few weeks here. Let's go ahead and bust out our handy dandy calculator. Move this over. I'll leave it right here. Now, we didn't really do a video last week. So last week, between The 6th, the markets were closed on the 6th, so the market was open between the 7th and the 10th. So I didn't really make a video last week. So if we take the stocks that paid out dividends last week here recently, that was 980 plus 1413 plus 676 plus 356. So last week we received $34.25 of dividends. And then this week we received $10.41 from 3M. We received $3.21 from Avery Dennison, $8.15 from Main Street Capital, and $3.05 from Realty Income. So our grand total over the past 2 weeks sits at $59.17, which adds into our portfolio. We haven't invested anything over the last week or two, but we have made our deposits of $201.42. We add that right there. That's $402.84. So we have a grand total there to invest of what looks like $462. Well, okay, so a little under there. My math may have been off just slightly there, but our cash balance here sets at $461.91 to invest today. And then here, as far as the activity goes, I did sell at a Pfizer. I'm still looking what the sell cost was, or the sell price on Pfizer. So I sold at a Pfizer. I sold $500 and some at $49. So not $59, it was $49.93. So that was one of the sells that I had made a few weeks ago, back on August 23rd. I sold out $570. So Pfizer, I'll buy back into Pfizer at this lower price just a bit. I'll bite. And so there we go. We covered, what have we covered so far? The overall performance, the weekly performance, the activity. Now let's go ahead and take a look. What is the current dividend income of this portfolio? And for that, I use trackyourdividends.com, completely free website. I added all my positions in. I recently added my newest buys into the portfolio. So if we look at the holdings here, and we look at our thing here, our actual portfolio, 36,827, 36,828. So this doesn't have the fractional shares all the way down to the 10,000ths of a share. It only has the 10th of a share. So this is going to be slightly off, but the annual income should be fairly accurate. And the annual income of this portfolio sits at $1,045. So we're going to go to keep track of this. I'm going to go to keep track of it on a week-by-week basis. It's taken us, 3.5 years for this portfolio to now get us an annual income of $1,000. So this is an extra $1,000 that this portfolio was producing that is being reinvested back into the portfolio on a year-by-year basis. So say in another 3 years, the annual income of this portfolio then doubles to $2,000, probably somewhere over $2,000. Then in another 3 years from that, with compounding, we're now making $3,000 in the next 6 years from now. So it just continues to double. Eventually, this portfolio alone will be generating $10,000 a year, along with our other portfolios that are out there. And then eventually, we can just combine them and do a little bit of mixture right there. But that's all way in the future here. So our dividend yield is 2.84%. That's our initial, if you were to take our amount right now and buy into these same holdings, you would get a net yield of 2.84%. But our cost basis, so our yield on cost, based on when we purchase our current holdings and having them raise their dividend on a year-by-year basis, our cost basis yield on cost sits at 3.44%. So that is pretty interesting. And we have a pretty low beta in comparison to the S&P 500. Generally, the S&P 500 sits at a 1. That's the sort of beta there of the profile, the measure of risk. S&P 500 sits at a 1. Ours sits at a 0.76. So it doesn't fluctuate a whole lot more generally than the markets. But we can see this week, it just depends. So it is down just a little bit here. And this is pretty nice. You can actually dive into each individual holding, take a look at your annual payments, your payout ratio, how long they've grown and paying out dividends. You can see here, I use the free version. So, there's some functions here that are not added, but Dividend safety scores, Johnson & Johnson grown and paid in dividends for the past 20 years. Not a lot of risk there. You can see some other dividend factors in here as well. So Johnson & Johnson right there. Let's go ahead and go back here. The annual income here is covered at $1,045. Okay, now jumping over into number 5, what stocks are we buying today? So I do have 5 stocks I want to go ahead and share with you guys. We're going to go ahead and quickly cover Pfizer. This is one that I've been eyeing. We sold out of it at $49 and some change. It has dropped now below its 50-day moving average. Now this could be signs that this can continue trending down all the way down into the $40 range. That's a $3 difference there. So this could continue to trend lower. There's really no way to tell here on Pfizer, but I'm pretty happy with buying Pfizer, $5 cheaper, $8 cheaper than where I sold out of it. So I will buy just a little bit of Pfizer here at that $43 mark. And then here, Lockheed Martin was one that I picked up not too long ago at $360. It does look like it's having a bit of a death cross here. So we can see here that it does have some sort of support earlier in 2021 in the 340, 325 range. But this can be an area right here where we could see some volatility in Lockheed Martin. This one I had added into it here recently, but it is looking like it may continue to downtrend in the future. So I'm going to go ahead and hold off on it. Just kind of see, is it going to stay in this area right here and kind of trend sideways in the 340s? Or will it break down into the 320s and kind of stay in there, get some support before bouncing back? So Lockheed Martin is one that I'm kind of eyeing right now, but it does look like it has some pressure to the downside. Cardinal Health is one that I recently added into here not too long ago. I think it was during our last video 2 weeks ago. I added a little bit of Cardinal Health after this drop here. So big loss right there, all the way from nearly $60, falling down, almost touching $50 before beginning the rise. So we bought it right around this $52, $53 mark, and it's been kind of wiggling in this range. It does show some downwards pressure here with the 50-day moving average, but we can see some consolidation. It's kind of trending sideways, so I think it has support here in that $50, $52 range right now. So I think this is a good opportunity. Cardinal Health is another one I do plan on buying today, and just kind of added into that position as well. Colgate, this one just continues to kind of get beat down on a on a monthly basis here. It has some good periods where the price goes up, and then it has some good periods where the price goes down. Right now we had that death cross, 50-day moving average cross underneath the 200-day moving average, so it does have some pressure down to the downside. It does have some support here in that $70 range, but we're going to go ahead and continue to see where this one kind of sits at. Right now, it's just in a downwards trending motion, so there's really no sort of trend line, such as with Cardinal Health. Cardinal Health had a big waterfall drop, but it's now kind of slowly trending upwards, whereas Colgate, it had a big waterfall drop, and it's now slowly trending lower and lower without any sort of bottom in sight. Merck here is another one here. Took a hard beating here recently. So huge beating here. Actually had a death cross right here, 50-day cross underneath the 200-day. That took down the share price down from $84 all the way down to 72. Touched 72, which is actually below where Merck is currently sitting at now. And then it reversed, came back up, had some little bit of a volatility through this area right here. I thought we may have seen a golden cross where that 50-day crosses over the 200-day, and we see some support. We saw some support here along the way, but it is looking like it kind of broke down here. So I'm not too keen on adding into Merck. I already kind of added enough into Merck where I feel I'm going to go ahead and just kind of hold it, and this could be an opportunity. You can see how quickly these kind of rebound here. It hit 71, 72, quickly rebounded here, hit that 71, 72, quickly rebounded here. So history kind of repeats itself where, it hits 71, 72, bounces high, 71, 72, bounces high. I'm going to go ahead and see this one next week. Merck, where's it going to be at? It's at 71, 68 right now. In the next week, will this be higher than 72, 73? Will it be up in the $75 mark? So we'll kind of see where this will kind of be at. But again, it's not always with the individual holdings themselves, it's also what's kind of taking place out there in the market. So our current buys for this week is Pfizer. Number one, I'm going to be adding half of my buy into Pfizer. And number two, we're going to be buying up some Cardinal Health here. Both of these positions kind of beat down here in the short term, but long-term wise, still great companies for the long term. So those are going to be our two buys of the week. So jumping back over into the portfolio, number one, we're going to go ahead and find Cardinal Health. Actually, let me go ahead and take this, split this up by 2, and I'm going to go ahead and add that much into each buy. Okay, back in Cardinal Health here, we're going to go ahead and select buy. Select our drop-in right there, continue, and confirm that buy. A whopping $230 going into that one. And then back into the portfolio, we're going to go ahead and target up some Pfizer and buy sell. We're going to go ahead and punch in the rest there of 230.96, and that'll be all of my available for order there, and continue and confirm, and done. So that is it for this video. We went ahead and covered number one, the overall performance of the portfolio. Number two, the 1 week performance in comparison to the 4 main indexes. Number three, the activity for the past week, our buys, sells, dividends and such. Number four, we covered the dividend income from this portfolio, which currently sits at $1,045. And number five, we covered what stocks we're buying this week. Let me know what you think of the buys here of Pfizer and Cardinal Health. Let me know down in the comment section below if you guys are planning on buying anything yourselves. I'm just continuously dollar cost averaging into the market, into the positions that I currently hold. And that is it. Thank you all for tuning in. If you guys have any other questions or comments, let me know down in the comment section below. If you guys aren't following me here on YouTube, definitely subscribe. Also follow along on my Instagram. I post quite a bit of tiny little comments as far as like updates. You know, I made $600 in premium alone last week selling call options on SPY. So quick, $600, and they expired on Friday. Got to keep my capital. And we're going to go ahead and do some more options here on Monday. So definitely stay tuned for that and check out that video as well. So that is going to be it for this video. Thank you all for tuning in. I will see you guys next time. Have a great day. Bye-bye.